Jason, value having its moment in the sun, cyclical having its moment in the sun, as Mike just said. But any time that this has happened in the last 3-4 months or 3-4 years, it has been temporary. Well, what's your take this time?
Well, I have to say I'm pretty cautious on the cyclical move, or at least cautious on deriving too much information from it. And again, it's inevitable. There's an awful lot of liquidity that there are going to be some days where value does better. But I'm largely of the view that that we're not going to have. We had a V-shaped bounce, but I still feel pretty strongly that a V-shaped recovery is unlikely. And I think when growth is scarce, you're going to continue to pay up for growth stocks. Now, I know that's been happening for a good part of the last 11 years. So, at a certain point, the valuation should matter. But I think I'm somewhat fearful that the better jobs numbers today may allow policymakers to take their foot off the gas. I think that would make it more problematic to get a stronger economy, and therefore make the value and cyclical stocks somewhat more challenged as we move forward.
Which brings us to you, Mike Ferroli. How badly does this economy need the stimulus? We got a better than expected jobs report today, got the unemployment rate down to in the 10% range. What are we looking at here if we don't get a stimulus?
So if we don't get stimulus, I think the economy is in some serious trouble in August into September and into the fourth quarter. Right now, those unemployment benefits, the $600 weekly bonus payments, account for about 5% of household income. And without that, if that evaporates, I think we would see consumer spending fall pretty sharply in August and September, and I think that would put at risk some of the recovery we've really seen since May. So, and I understand folks who want to get away from the fiscal support that we've been on, but I think if we go cold turkey all at once, I think that could present some real problems for what has otherwise been a pretty good run here for the economy over the past 3 months. So it's definitely a big risk. We continue to believe that there will be a deal, but if there isn't, that would be trouble for sure.
Mike Ferroli, even if there is a deal, how worried are you about worsening weather later in the year, given that so much of the hospitality economy that has rebounded has been based on eating outdoors, gatherings outdoors?
So first of all, we're already seeing signs that this morning's number was very good, but it was slower than the number we saw over the last 2 months, and I would expect that to continue going into August and September. And so we're still about 13 million jobs shy of where we were in February. So, even before we start talking about a resurgence of the virus, we're slowing into a period where we still need a lot of jobs. Now we have back to school coming that could either lead to a resurgence in virus counts. At the very least, it may be a headwind to labor force participation as more adults are challenged to keep two-income households going with a lot of students at home. So we are, I think, after Labor Day, going to face a pretty challenging situation, even if we get the stimulus we're hoping for. If we don't get that, then we're, I think, really going to face some challenges.